Welcome to the Trading Zone. I'm Joe Teague, Equity Armor Investments. Great to have you all here. Brian, great to have you with me on another exciting trade week.
Yeah, certainly is. Markets obviously bouncing back today after a horrific Friday afternoon after that jobs report. And, we just want to get into it. We talk here about volatility and macro ideas, and we give a trade at the end of the show. So stay tuned for that. I think we got a good one here for you. And just in case these markets get a little bit wild coming up here in August and September.
Yeah, we said last week, pay attention. This is a huge week, and it did not disappoint. We got another arrow here on our 2025 VIX chart here, Brian. We got the jobs revisions coming at the end of the week. That was the story. Yeah, maybe a weak jobs report, but the revisions downward from the previous 2 months just evaporated a ton of jobs. Complete mystery, setting up this big kerfuffle, the firing of the statistician or the person in charge of those statistics. People are saying, hey, this isn't good. We're just going to make up these numbers. I think a lot of us traders are saying, we don't really believe these numbers. We haven't for a long time anyways. So just taking it for a grain of salt. It's hard to really hide the real data, but just the way that they do it with the revision has always been a little bit of a problem.
Yeah, I think, we look at this graph here on the VIX and volatility, and it's interesting because the news event that occurs, yes, it does move the dial on volatility, but you also tend to see a little bit of a follow through when that news comes out. If you look at all these arrow points, it's like, okay, maybe you missed the first part because you weren't in the now, or you didn't make bets originally, and the market moved on that news, but then there was usually some follow through in the VIX after that. So this could be sort of the taking off point of a VIX pop here into the mid 20s.
Yeah, absolutely possible. This could just be, 2 steps forward, 1 step back type of a thing. It's definitely something that we see frequently, but this 20 area just could be, hey, this is a higher end of the range. We snap to the higher end of the range. Maybe we're going to bounce around from the low to the high again. So 2 things very possible here. I want to take a look at the skew like we do every week here, Brian. Skew popped with the VIX, of course, last Friday. And, we're settling in here again. This is what we were saying last week. Hey, if we get above this 5 area, look out. This is going to be, potential short-term problem. And absolutely that happened. So it's not a big surprise here. Now we're kind of wedging in here. Are we going to make a new high here or not? Haven't really definitively done that. So something we're watching obviously very closely. If this does make a new high, that's going to be a big problem for the market, and volatility will be higher.
Yeah, I don't think it's unusual for the market sort of to bounce back today after that bad Friday and the market's being down. When you look at the amount of put buying that occurred here and that skewed jumping up, I think it did get maybe a little ahead of itself, but certainly that's an indication that traders are thinking volatility is moving higher. There's some risk to the downside on this market, and that's why they're buying puts. So I wouldn't maybe just outright buy a put to protect, maybe a put spread, and that's just a little tease for our trade of the week later on in this show.
Hang around to the end of the show, of course. So last week, Brian, we were talking about the VIX futures, and we saw something really steep here. We saw these futures down here, or the VIX spot down here, these futures were way higher here. We saw this very steep increase from the August future to where the spot of the cash was, and it caught up in a big way. So it just makes another reason why trading volatility futures is very tricky. Maybe these futures traders are saying, hey, volatility is going to return in a big way. Well, they kind of missed out on a lot of this gap just because it was already kind of priced in if you had bought it right then. So it's just very tricky. It involves a little bit more complexity in order to be able to capture those moves in real time. So it's just something we were watching, we were noting, we were saying, hey, this is potential to snap back up here, and we'll see how it plays from there. But going forward, we're in much more of a balanced term here. We're obviously a lot closer to the August expiration here, so naturally that's closer. But we're seeing a much more natural looking curve here where it's closer to the spot.
Yeah, I think, the one thing is that with where the VIX futures are and the VIX, obviously mean reversion, you've got, from a month ago, that could maybe pull the VIX back down into normalization, back where it was, somewhere between a month and 2 months ago. But all these months have been so compressed to the downside that we might be sort of due for a pop up and a reset a little bit higher back to normalization of where we've seen the VIX most of the year. So that's something to watch out for.
Yeah, and I want to bring in one more chart here, Brian. This will be a surprise chart for you. This is something new. I brought this in for this show. We talk about volatility, things that are moving the market. I think one very important volatility component, which has kind of not been talked a lot about, has been this MOVE index, Brian. So this is the volatility of bonds. This is the bond index volatility. It's a VIX kind of the bonds. It measures the implied volatilities of these bond prices. And this has just been hammered ever since early April. It's just been gotten slaughtered, going lower and lower and lower. Did not really see a huge jump up last week. And this is just kind of a sign for me that there's liquidity in the market. There's global liquidity. People are not necessarily concerned about these bond prices, even though we've seen, U.S. debt rate and geopolitical concerns. But this just appetite for bonds, even though it seems like it's not really there, really the volatility has just been really low.
Yeah, it's interesting. I think to get really an extreme volatility pop throughout the market is you're going to need to get a ripple effect, not just from equities having a 1 or 2 day sell off, but more systemic risk that's out there to get a significant volatility pop. So we're not really seeing that in the bond index or bond volatility index, I should say. And so, that's maybe one of the bull case scenarios for this market, that liquidity is still there.
You can see I'm getting excited. I got one more chart for you here, Brian, coming up next. So I talked about this liquidity being very high. That liquidity is directly correlated to PE ratios. So that is kind of the risk. Yeah, if we were to get a snapback higher, we're going to get a correction in these PE ratios. Take a look at this chart. If you flip the MOVE upside down to a negative MOVE index, put it against the PE ratio of the S&P 500, you see something that looks like this. So the lower the MOVE index goes, the higher the PE ratios tend to go. When it spikes lower, you're going to see a correction in these PE ratios. So that's just something I want to watch very carefully as we're talking about these jobs data. Are we going to need to lower rates really quickly? Is there already problems here? We're going to watch if the MOVE index ticks higher, we will see a corresponding downtick in the PE ratio. That's going to hurt stocks.
Right, but that does justify some of the higher PE ratios that we're seeing right now and the higher valuations, right? Absolutely. Because if the liquidity is there in the marketplace, maybe PEs can be higher.
And that's what we're seeing. And that's been the fun game. If we can stay stabilized here, these PEs will stay here. Earnings have been fine. Earnings have been mostly fine. It's been an interesting stock. We've got a lot of earnings coming up this week. Let's take a look at actually what's going on the rest of this week. Big day today, huge rebound. Maybe we're just talking about the Fed lowering rates. Great news. We love it. We'll see if that holds. For me, this might just be kind of a gift of this little bit of a bounce back. If it holds, it's great. I'd be happy, obviously, to see that. I think we talked about last week. We got the storm coming. We got August coming into September. Very volatile time of the year. August specifically, year after election, specifically in a second term of a president, happens to be a very bad month seasonally. We know September seasonally bad. So got the rebound today. Love to see it stick. Lots of news coming later. Maybe it will. But for me, long term, very bullish on what's going on. You know how I feel about AI. Very bullish about the future of the economy and technology.
Yeah, but we do have to talk about the Fed and obviously naming maybe a new Fed governor coming up here from Trump. We looked at the jobs data from last week, kind of digesting what that means. The fact that the revisions have missed so poorly over the last year and a half or so has been really, it's kind of despicable how badly they missed. I mean, of course, somebody's going to get fired when you're not doing your job correctly. So, look, I think when you look at what the Fed needs to do and you look at the jobs number, it does seem like maybe they need to cut. Now, having said that, inflation is still above that 2% number. So we're kind of stuck in the opposite of Goldilocks, where you don't know what to do really right here. There is some concerning in the jobs data right now. It seems like the Fed's going to need to cut for the market to move higher. And so I think there's this sort of, now we're in this dead period of August and waiting till the September Fed next meeting. We're going to need other Fed governors to come out and say, yeah, you know what, we really may be looking at some of this data. We should lower interest rates. I think until you start to get some of that tone, I would be more of a sell the rally in this market, Joe.
Well, yeah, the new governor is going to be very dovish. We can assume that he's going to be on the let's lower rates right now page. So it's going to be another voice in there. It's going to be, there are some already. They're thinking the rates should be lowered, of course. So yeah, I think it could signal more rate cuts this year. It could signal more rate cuts next year. I think the market looks forward enough to say, hey, we might be lowering back all the way down to zero again. Just with this current trajectory, we'll wait and see. Yeah, the data is it is what it is. I haven't trusted the data for my entire trading career when it comes to what the U.S. government is putting out. But just looking at future data, if it's like suspiciously good, I just wonder what the market's going to do.
Yeah.
Anyway.
So I think when we kind of look at here some of the key things for the week ahead, obviously, Palantir, that's been a huge winner over the last year. They really are just, going full throttle in this AI play. Joe, we love this company.
We did an earnings report. We did an earnings trade on them last time before their earnings. And what we said then, I kind of feel similar today. This is not the trade of the day, but the earnings we did before then, I think it was trading around 110, and it just recently gone from 80 to 110, like in a heartbeat, like Palantir tends to do. And we were saying, hey, this has just come so far so fast. The earnings are kind of irrelevant. This growth trajectory, it's happening. They're going to have good earnings. They're going to talk about how much they're growing, but it's going to be impossible to justify going from 17 to 110 in a year. So we bought a very short-term put spread, and we said, hey, if this pulls back, it's going to rebound immediately because people are going to want to buy it lower, and we close that put spread immediately after that. So that was a fun trade. That something similar might happen. I think it's going to just be very hard for it to spike higher. It could happen. We saw Nvidia do it, but it's very hard. We got these super high option premiums. Maybe something like selling upside call spread might be the way to go today, but I'm not touching that right now. There's just too much flying around. But we do have a different trade coming up at the end of the show. Make sure to stick around for that as we're going to digest all these earnings. Just watch this market, just digest all of this news as we're coming up to this critical point of August.
Yeah, AMD I think is another interesting one that's had just a huge run recently. It seems like they're trying to get into the chip making, maybe compete with NVIDIA, although obviously they're behind the curve and they've got a lot of catching up to do. So who knows if they'll actually get there in time. But they've really been the leader in other semiconductor areas of the market that have been doing so well. We point out the SMH a bunch of times on the charts, and we probably got a chart of that for you. But AMD really being the leader there, that'll be an interesting earnings watch. I wonder if it kind of has like a little bit of just a pull back a little bit after their earnings, buy the rumor and sell the news kind of thing. So I'll be kind of watching that, but I do like the stock overall.
Yeah, we'll see. Here, let's get into the charts very quickly. This S&P 500, the chart that I can't quit. These trend lines, we could not quite make it up to this upper trend line here, of course, before pulling back. I think just staying between these trend lines are fine, but obviously this would be a very big pullback. But I think something like that, of course, is the total return price. So something around 6,000 on the S&P 500, 6,100 would be a target that kind of is going to be my target if we stick around to the end of the show in the NASDAQ index. So here is another view of the market. This is, to me, I think the NASDAQ, the semiconductor index, are really the heart of this rally, obviously. So watching this very closely, definitely had a steep pullback. Amazon earnings playing a key part to this. I think this is a natural spot to think that we might be coming to. Was resistance back in February. We'll see how that plays out.
I think the 50-day moving average is something that's in play. The thing that the NASDAQ index so far ahead of it. For an index to race so high above a moving average without coming back to it at some point here seems like, now that we got a little bit of a bump in the road, it seems like that's an area that it can, sort of touch and go before it moves significantly higher. But But the volatility's picked up a little bit, and coming back down to there would kind of be a normal, feel a little bit of a correction here. I don't know if we get through 22,000 or touch 22,000 again, but certainly 22,200, 300, let's call it, is in the cards. And then you look at here, the SMH. We've talked about this a lot. This has been a huge breakout. AMD, again, one of the leaders in the pack, but obviously NVIDIA as well, comprise this index here. Other little, smaller semis related to circuits and whatnot doing very well. This has been really an indicator of a leader in the market. We like looking at the semiconductor index and the sector itself because as it sort of leads the charge, the rest of the market tends to follow. So it's still, bullish signs here. I wouldn't be too concerned about the market unless the SMH gets below the 50-day moving average and below really that what was resistance on that red line there, Joe, should act as support.
Yeah, we'll see if that plays out. Hopefully it's not too big of a pullback. Hopefully it's over. Hopefully today's correction will just continue on higher. As you know, we're always skeptical of everything. It's certainly possible that the correction was just one day over, but we'll see. I think Thursday's announcement with the tariffs coming through, that's going to be really important to me. The NVIDIA China news were really important over the weekend, and it's kind of fresh. Well, let's just kind of see how this really shakes out. AMD Supermicro is also going to report this week, Brian. So we'll get plenty of news. We'll get a lot to look at. But this is a chart that we were looking at last for some months now. We're just kind of saying, hey, the market is rallying. The market's at all-time highs. We hypothesize that maybe the rally is going to kind of end right when the Mag 7 hits its all-time high. That was a pretty good hypothesis, Brian. That seemed to be spot on. Absolutely happened. Then we kind of pulling back now. This would just be totally natural. It's natural to kind of get some sellers once you get to an all-time high at a certain thing, especially when it's been about a year. And now if we can consolidate here and pull higher, that would be like the most healthy thing for me. And it just kind of goes with my broader thesis. If you like our content, if you want more of our content, you can get this delivered to your inbox every week. This is just talking about the overall market. I talked about what we had talked about earlier, but weaves in the story of Icarus, Brian. Icarus, of course, the Greek mythology. His father gifted him some wings, which were beautiful wings, but they were made of wax that stuck the wings together. And if he flew too close to the ocean, too low, the wax would get a little wet and the wings would fall apart and he would crash. If he flew too high, too close to the sun, the wax would melt. The wings would fall apart. So I think we want the stock market to do the same. We don't obviously want it to crater. Nobody wants that. But when it goes too high, it just gets too risky, too full of hot air. It's going to crash again. So we want the market to not be flying, soaring high always. We want these healthy pullbacks. We want these areas of consolidation here. So I feel really good about the market that we're not just flying away, racing to new all-time highs. I like this consolidation.
Yeah, the story of Icarus. I love Greek mythology. It's a lesson to be learned that things in moderation are the way to sort of live life. That's kind of how I treat things as well. No need to get too over exuberant or too down on yourself. Trying to fly that baseline, have that small wavelength back and forth where you're traveling in the middle there. So certainly it's a great story, both in general for Greek mythology and for the markets. And so that's why we're I think our thesis, Joe, has been, look, we've been flying a little bit maybe too close to the sun right now, right? And probably Friday's job report triggered a little bit of a pullback, a little sell-off. The Amazon earnings, obviously, Amazon trading down, although I actually like the earnings. I don't really, understand a reason to sell a stock like that based off of forward guidance that I think they used their good earnings for the quarter to maybe guide a little bit lower to be able to come in next quarter. So I'd almost be buying on a pullback with the stock like Amazon. That very well could have been a trade of the week. Maybe that will be coming up here for us. We obviously had a long call that we had put on last week from our earnings, and that call obviously went out worthless. But that call was not a bad play relative to being long stock. So look, that's why you use options, to risk less to try and make more. And sometimes you get it wrong, but we want to turn ourselves into the casino, not be playing blackjack. So we want to be dealing the cards, and we dealt cards, and the player won on this last one. But I think there'll be some opportunity now to buy Amazon, and if you had traded that option, you didn't get hit as hard as owning the stock. So again, maybe flew too close to the sun, ready for a little pullback, and look forward to deploy some new cash.
Yeah, I think there's a lot of traders that are preparing for this. There are a lot of smart people. If retail, or if some people got caught off sides, tracing it to the upside, then this is what's going to happen. Now, if today might be the day that people are saying, hey, the pullback happened, we're buying it, I think it stands to reason that it's a little bit more. So we'll see what happens the rest of the week. The rest of this week, I think, again, Thursday is going to be an important day for me with the new tariffs coming online. Real quick, let's take a look at GLD, Brian. GLD is something that we put on a couple of weeks ago. We bought a 310, 320 call spread. We still have it on, expiring next Friday. So something that just kind of watching it play out, just another hedge that we have on. We were kind of expecting this week's jobs data to lead people to think that interest rates will be going lower, which will lead inflationary assets to be going higher, which is why we had this call spread on.
Yeah, I guess maybe the one concern on the call spread we have on, Joe, is just I would have liked to have seen gold maybe pop a little bit more on that jobs number, with the idea that interest rates might head lower. So, but there's obviously been a ton of resistance up there, like around 315. Yeah, and let's maybe bring a chart and maybe zoom in a little tighter on where this thing could go. Obviously we saw the huge breakout after a nice cup and handle move. Now we're in this sort of like flagging period, and it was making higher lows right in here with like hitting a resistance line, and we kind of broke down that. But the hope here would be that it trades back up to that like resistance line. And
so we're up on the call spread. We put it on for 230, or I put it on for 230. Could think about taking some profits here.
Yeah, not a bad trade. Like I said, I would have liked to see gold GLD pop a little bit more, but it's moving up. So stay tuned. Hopefully, you can go to equityarmorinvestments.com and subscribe to our newsletter trades and follow along. So as we take that trade off, or carry it or hold it or whatever, we'll make a decision about that coming up. You can, go online, subscribe to our newsletter, get that information of trades right directly into your mail inbox, and then trade alongside with Joe and I and our ideas.
Awesome. Well, that brings us to today's trade of the week, or this week's trade of the week, or the trade of the week today. So we got the cues here. We're looking at some downside protection. We're being gifted, Brian, in my opinion, this rally today. We'll see if this holds. If it does, that's great. We got a whole bunch of other things that'll be going higher if the stock market goes higher. But I think having some short-term protection is going to be crucial. This is my target right here, February's high in the market. So yeah, that's what am I looking at? I'm looking at the 355, the 555, 540 put spread expiring August 15th. And that's going to be $3.10, Brian. So it'll be turn into $15 if we do materialize that entire $15 spread. So, risking 3 to win 12 is the trade here.
Yeah, I mean, the payout, the risk reward is great. Obviously, we need the NASDAQ to move down. Oh, let's call it, $7. So, you're looking at least still a 1.5% move down before the put spread hits that strike, that long put strike that you could exercise to get short the Qs. And then obviously we paid for this put spread. So break even, sitting right here at 551 and 90 cents. So we do need a little bit of a move down. I'm not sure we hold this all the way to expiration to expect it, but so this is kind of like, let's look to get some sort of sell off, lower our cost in case we're totally wrong. And this market's done, what it's done so many times before and just rips all the way back to all-time highs. We're sort of limiting our total debit outpay by selling that 540 put, but we see this thing trade back downwards towards that 555 level. We might be willing to take that off before expiration if the value of that put spread is increased.
Yeah. So we'll got about 1% of the downside exposed. Then we're going to get 2% the downside paid for with this spread. I think, maybe we covered the gap here. This gap here from Thursday to Friday that has been covered. So we'll see what happens right here. If we do trade,
that's kind of a healthy coverage, and to do it that quickly on the open, my past history of being a market maker on the floor says that move happened too fast and too good that it might be hard to continue. And I wouldn't be surprised if we sell back off later in the day here. And so again, I'm not saying we're out of the woods here by any means for the market to move higher. So that's why I want to own this put spread. And, look, the Fed needs to change their tune or tone, I should say, to want to cut rates. I think that's going to be the catalyst that moves this market higher. And if they don't, then I don't see what holds this market up for right now. We've had where we've flown high to the sun, right, Joe? So
it's tricky though. I mean, the Fed has to do the same thing too. The Fed has to balance it. The Fed can't say, oh, this economy is cratering, we need to lower interest rates. They need to kind of give confidence that, hey, this rate cut's not about a weak economy, even though it might be. They need to make us think that these rate cuts are about low inflation. And that's kind of tricky because the inflation's not as low as we'd like it to be.
Well, yeah. So, Joe, this is going to be a tricky couple weeks ahead. We've given a lot here on the show. Make sure you turn in every Monday right here, 10 a.m. Eastern. We go live. And if you missed the live show, obviously you can tune into our YouTube channel at Equity Armor. Make sure you subscribe and like this video down below, and follow us on X as well at Brian Stutland or at Joe Tigay. So we are here every Monday, 10 a.m. Eastern. Come and check Equity Armor Investments out. Go check out our homepage as well for lots of fun facts and information about the products and strategies we're trading with our firm. But Joe, that's about it for the week. We'll catch you guys next Monday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.